Hello and good morning, listeners. Welcome back to Almus Market Mornings, your daily dose of global financial updates. I'm your host, Swaraj Rajagopal, and we have got you covered on everything from currency shifts to pivotal central bank decisions and important speeches. Plus, you'll gain expert analysis on macroeconomic data that's shaping the market narrative right now. Join us for this episode and navigate the markets with confidence. There was a host of data yesterday that kept market participants engaged, starting with the ECB, which cut its benchmark interest rates by 25 basis points. It was a well-discounted move, especially after the troubles of Germany. Apart from this, US PPI, which was released yesterday, moderated, headline coming in lower than expectations, a trend we observed similar in CPI, and of course, the Indian inflation data. Good morning, JK. A lot of data to chew on. What do you think about yesterday's moves? Gold also hit all-time highs. Are we expecting a trending move there?
Hey, good morning, Swaraj. Yeah, and I think most of the market moves yesterday's session was bit surprising, I would say, because as we explained in yesterday's update, the CPI data did not come down as much as Fed would like for a 50 basis points cut, and also the services side inflation was rising. Yesterday's PPI data was also somewhat, on the uh, I think on the mixed side, I would say headline was higher for the month on month, that is 0.2% versus flat last month. And although the year on year was lower by 0.1%, again on the core side, we had seen a rise at 0.3% versus 0.2% expected. This, as well as a poor reaction to the new issuances of long-term bonds by the Treasury, not getting good response, all this would have led us to believe that the yields would rise and the dollar would recover further. And more so because ECB also cut rate yesterday and expressed that they remain data dependent, and also talked about challenges on growth. So all this, I would normally one would have thought the dollar would recover, but that was not the case. Actually, the dollar has fallen, and this is also, down to many analysts in the market still expecting Fed to be aggressive in their rate cut. The probabilities as per the CME has already risen from 20% to 40% probability of 50 basis points cut by the Fed in September 18 meeting. And of course, while the data this week did not add to those expectations, retail sales next week is one big number that the Fed will have to digest before they get into the policy decision. But perhaps one can only think that perhaps the central bank is likely to take a preemptive move for supporting the growth rather than just being focused on inflation. Anyway, last month the Jackson Hole meeting also, Powell had shifted his focus more towards supporting growth than on inflation front. So that may be the only reason. In fact, yesterday we saw the dollar almost testing the 101 level, just about 0.5% away from its 1 year low, and dollar yen again falling to 141. So that itself is a very clear indication where the dollar is going, because the yields on the Japan is the lowest, and the difference in yield between US and Japan still is quite high, but dollar yen seems to be taking the lead in on any fall. And the other notable movement was in gold, which broke into a new all-time high and trading around 2,560 mark currently. What also gave the boost, perhaps, to the gold was the rise in fiscal deficit in the US government, which is now hitting 1.9 trillion mark, and for the deficit for the month of July was 24% higher than the what was seen previous month. So that has given rise to some concerns that there can be some sort of a bond market dislocation, and that gave some safe haven boost to the gold. Perhaps the U.S. government and the Fed thinkers would be thinking of 0.5% cut, which will also not only help boost the growth, avoid any further deterioration in growth, but also help the fiscal deficit to be improved, because the interest costs have been taking a big slice of the government's budget. So that's the only way I can see that 0.5% cut can happen. Otherwise, the economic data, fresh economic data this week did not support the same. On the rupee, we had CPI data yesterday. Once again coming at below 4%. As we have stated earlier, also these numbers are lower because of a base effect advantage, but this is likely to go away from the next month onwards, when we expect it to be between 4.75 and 5%. The industrial production was slightly better than expected, particularly in the manufacturing side. But overall, I think RBI policy is unlikely to be changing in a hurry, even if Fed goes for a 0.5% cut this month, because the growth picture in India is still strong, and inflation overall is still well above 4.5%, which will be confirmed by next month's figure. The earliest that Indian central bank can be expected to cut is in December this year. Perhaps we can see some change in the stance from one of withdrawal of liquidity in the month of October when they meet. So that's the only change that we can see. As well as the rupee is concerned, the macro data on inflation and industrial production is unlikely to make any changes to its trajectory. In fact, the dollar index move will be the biggest factor. If it breaks the 100 mark, then we can see some concession by RBI on the dollar rupee to move lower. But again, 83, 70, 75 will definitely offer very strong support to the dollar. Yeah, while we say all this, what we are actually seeing on the ground is that the rupee is still stuck in 2 to 3 paisa range, because the demand and supply are quite well matched at these high levels, and we really need some big event globally to push the market out of its current current very narrow range. Yeah, that's it, and have a nice weekend. Thank you.
Thank you, JK. And just quickly summarizing that the probabilities of a 50 basis cut in September, though it remains low, but after yesterday's data has started rising again. But coming to the data itself, similar to CPI, PPI was also mixed, headline lower, but core month on month higher, which is again something similar, very similar to what we saw in CPI. ECB cut its rates yesterday, and they remain data dependent as per their commentary. Dollar has fallen after these developments, despite the mixed inflation data, as bets for a bigger rate cut start rising. And on the movement front, Japanese yen and gold gained against the dollar majorly. And for rupee, even though the CPI came in below 4% due to favorable base effect, it's unlikely to change RBI policy, at least in the near term, as growth remains strong. And the earliest cut, as JK mentioned, can be expected in December. And that's it from us today. Thanks for listening. Have a very good weekend and tune in on Monday for the latest in the financial markets.